What are you expecting from the Fed, and what do you think they should do?
We're hopeful that they were going to pause and talk about looking at things on an ongoing basis. The primary objective should be stabilizing the financial markets. That's not our expectations. We think they likely will raise by a quarter point and then say that they're going to look at the data on an ongoing basis. So possibly a pause at that point. So one of the two of those scenarios would be positive for the markets. If they were to raise by a quarter or a half a point and not talk about pausing, that would be taken as a negative.
All right, David, we also want to get your opinion on some new data we're getting from Refinitiv. It shows that investors are really going towards cash. Now, this is according to Refinitiv. Inflows into money market mutual funds last week, they topped $108 billion. This is the fifth largest net weekly inflow on record, going all the way back to 1992. For people listening, we're showing a chart, a huge spike at the end of that chart, obviously for the data we're talking about right now. David, back over to you. What does that say about investor sentiment right now?
It says investors are really scared. They're scared about both the stock market and the bond market, and they're taking money out and putting it into short-term certainty. While 4% on money market is very attractive over the near term, we do think if you have a 9 to 12-month time horizon, that stocks will be significantly higher and outpace that. So what we'd suggest is looking at your long-term asset allocation. If you have room for stocks, we'd be buying into weakness. We would try to turn down the day-to-day concerns about the market because we think it's very worrisome out there. We do think the market's going to get through this. We think the financial crisis is going to ultimately be contained, and we think there are a lot of stocks at very attractive valuations. So the key is to take a longer-term time horizon and focus on your long-term asset allocation. We would not be taking money out of stocks here and putting it into money market en masse.
All right. Interesting take right there, Davis. I want to ask you about one stock in particular when you talk about buying into weakness. That's First Republic. This morning, it's up more than 20% in the pre-market, clawing back about half of its losses from yesterday. Obviously, the stock's down more than 80% month to date. When we're talking about this stock, you gave us some financials picks. This was not one of them, to be fair, for the audience. You did not pick First Republic. But right now, is this an attractive opportunity to buy First Republic? Do you believe the bottom's already been reached?
What we've found, and we've been doing this for a very long time, been through many financial crises, it really doesn't pay to try to pick a bottom on a sick financial. Ultimately, in hindsight, it might go up a lot, but usually sick financials have problems and things don't turn out particularly well for equity investors. We think the whole banking group, the baby's been thrown out with the bathwater, so you're able to get some really great banks and financials that are very rock solid strong at very attractive prices. So we'd focus on those type of companies. And the companies that we had listed were like a Bank of New York or a Goldman Sachs or a PNC. We think they're lower risk, great stock prices. You might make more in a Republic. However, you could lose a lot more. The companies that we suggested, we think if you have that 9 to 12-month time horizon, you're sort of a lock to make some pretty reasonable money.
All right, one more of your picks before we let you go is Amazon. Obviously, some big layoff news yesterday. Was that one of the reasons why you're feeling positive about this company? Basically, they're leaning towards more efficiency and profitability, or is there some other factor?
Well, we think that on a valuation basis, if you look at it on a price to sales basis, it's at the lower end of its valuation for the last 3 to 5 years. We think they have good long-term prospects. And as you said, they're finally getting religion on controlling costs a little bit better. So we think that combination, lower valuation, focus on costs, favorable long-term outlook, all means that the stock should be a pretty good performer over the next 12 months.